Welcome, everybody, to Crossing the Line with Ray. No, it's actually with me, Greg Heym. And this week, Lisa Rae Castrigno.
Good morning.
And we got Lena, our bride-to-be. We don't have an official countdown on the wedding yet because they don't have a date.
So excited for you guys.
Other than she's rejected my band to play at the wedding. Outside of that, we don't know much, but it's great to have Lisa here today. And it's not just because your mother, you know. So I had a gig on Friday, and Lisa was there with the family, and her mother said, I hear you have a special guest this week. My Lisa Rae is going to be on. So we're going to enjoy that one more view we're going to get.
That's
on
right.
This,
You can say, hi, Mom.
Yes. Hey, Lucy. And Lenny, because I'm sure she's making you watch, too. No, I'm sure he's watching. He's very proud. It's been a while.
Yes, I know it has. But, you know, you've had much more important guests on.
Yeah, sponsors.
Yes.
You know, I didn't see you flash any money before you got it. How we let her in here without any cash? So, all right. Well, before we get going, we should also have a little disclaimer. Last week was kind of a boring week for the economy. I mean, things are never boring these days, but no new releases of note. So in the blog, I did this kind of like state of the economy and housing thing. We're going to expand on some of that stuff this week. So if you're wondering what's going on, remember that song, What's Up by Four Non-Blondes, is it? I forgot. I got to play it.
Oh, no, isn't it What's Going On?
No, it's actually called What's Up is the title. I know this because I'm playing it on Wednesday night.
Oh, there you go. No, you've been practicing. So.
At Mama Chan's in Northport from 7:30 to 9:30.
2-drink minimum.
Watch, after the next break, he's going to have, directions on how to get there.
No, actually, it's sold out. So
there you go. Good for you.
I don't have to worry about that. But before we get into the nitty-gritty, again, coming to you here from Studio 1873, let's start off with just a couple of messages from our wonderful sponsors.
Your dream home is closer than you think. I'm Scott Nadler, VP of Mortgage Lending at CrossCountry Mortgage, and I'm here to get you the perfect loan to match your perfect home. From first-time home buyers to seasoned homeowners, I've helped clients make their moves with confidence. Ready for a smooth, stress-free home buying experience? Let's get you moving today. Call me and let's turn those dreams into keys.
Sedgh and Zuckerman is a boutique residential law firm guiding you and your clients every step of the way with a solution-oriented approach. Make sure to work with a deal maker and not a deal breaker. Contact us today at sznylaw.com.
What do you really need to know about buying or selling a home? First, it's serious business, and it's complicated. There's a lot of money on the table, and emotion too. You need an agent who knows the ropes. So, whether you're buying or selling your home, work with professionals who have a mastery of the craft.
All right, so when we're talking about the economy, what do we always start off with?
The GDP number?
Right. You down with GDP? Yeah, you know me.
Yeah, I was waiting for that.
I've been waiting to say that I've just been afraid to. But now we've done enough episodes.
How to tee that one up for you.
That, gross domestic product is the value of all the final goods and services produced in the United States. I know you're like, oh, my God, I hated economics. Don't make me go through it again. But it's important to know the formula for GDP. So it's C plus I plus G plus NX.
I always forget something.
You have a degree in it. How you sure there's 4 things? Come on.
Would you always forget?
Lucy, I can only carry her so much. Come on. So C is consumption. What me and Lisa and Ray and Lena and all you fine folks listening and watching buy.
The stuff I like
spending,
to buy.
And that's about 70% of the number. But then you have to factor in the stuff that's made that doesn't sell. And that's I, which is basically investment or inventories. G is government. They spend money, they build things. And then NX is net exports. So it's exports minus imports. It's almost always negative or a drag on the number. And that's kind of what happened in the beginning of the first quarter. GDP was slightly negative because of a rush of imports to get in before
the tariff
started, tariff mania was coming. Second quarter, not so big on the imports because it was all here already. And GDP came in at 3%, a 3% annual growth rate. A lot of people will then say, see, look, everything's fine. What's the problem? Well, the problem is if you average out those two, growth comes out to about a 1.2% rate. Not great. Not going to get anybody excited. But since it was all about tariff avoidance, let's look at that consumer spending number because it's 70%. It peaked in the fourth quarter of 24 at a 4% annual rate. That's its recent peak.
Right.
The last two quarters, first quarter only a 0.5%, and again because people I think were waiting to see when they should buy things, and 1.4% in the second quarter of this year. So weak numbers. Should we be surprised that consumers are having a hard time spending, Lisa Rae?
I don't have a hard time spending.
My wife's not having a hard time spending.
Definitely don't go by me. No, I don't know. I mean, I think everybody jumped on that bandwagon of, oh my God, the sky is going to fall. I better get all my stuff now. And now that
certainly
they have
with
it,
automobiles too.
they don't need to buy it because they already did 3 months ago.
See, and then they've also racked up a lot of credit card debt. Right?
Yes, well, we've talked about that a lot in the past. It's a little concerning, especially with rates being so high. That's a lot of debt to be servicing month after month.
Right, and you add in the fact that we've seen a modest uptick inflation. In inflation, we'll talk about that a little more later, but with all the dire warnings of runaway inflation, which we debunked on like a weekly basis here, but we'll keep saying tariffs don't cause inflation. You worry about the consumers. But then there was this report from Equifax that even though consumers are taking on more debt, delinquency rates are still pretty low, right?
Yeah, it was just under 7%. And I think, what did it say? Over half of the people pay in full every month. So they're taking on the debt, but you're paying it in full, so you're not subject to any of those crazy interest rates.
See, Alfred E. Newman was right. What me worry? He has no debt because he's not real. But
don't we all
the other two guys are real. By the way, Ron Guidry actually pitched on Old Timers Day. He's 73, I think, or 74.
Wow.
And I don't know if you heard, there was an injury.
No.
Mariano Rivera tore his Achilles tendon just like taking a step, not even like running around. And he's my age. He's 55.
Yeah, but still.
So how's Gator getting on the mound in his 70s and throwing pitches? Huh?
I know he's been retired longer. He's been.
No, he's just a superhero that has no weakness.
He's superhuman.
Of course he is. He's Ron Guidry.
Right, because he's your hero. So yes, he's a superhuman. We get it.
Yes, and consumers, remember them?
Yes.
They've also been helped by rising wages. Wages have been rising higher than inflation, which is good. It's not good to keep inflation down, but it's good that it gives them a little more money to spend.
And they are.
And this is the smooth transitions we're known for here.
Oh, okay.
Actually, I don't think anybody's ever said that. The labor market has not been so good lately, and we spent a lot of time last week talking about the jobs report. So I'm just going to give like a macro kind of picture. Only 73,000 jobs in July. Like if that didn't sound weak enough, you revise May and June down by 258,000.
That's a lot.
That's a lot. So that means in 3 months, only 106,000 jobs. That's the worst 3 months of job growth since the pandemic. Do we have your attention now? It's like, that's really the headline number. But then this whole stuff came out about how reliable are these reports. And the commissioner of the BLS was fired. Somebody that nobody knows who they are. I joked last week, when I worked at the BLS, I didn't know who the commissioner was. But, we can go back and forth as to why some of these revisions are so large. It happens with data. Sometimes you barely get any revisions. I guess one of the concerning things was June's data was originally revised up slightly. Right,
to turn around and then revise.
May's data. And then, in June, May was revised up. And then in July, May gets plummeted down to next to nothing.
Right.
So
how did they get it so off?
Do you know? Because we could tell them. Look, there's a couple of elements. There's one, it's a sample.
Right.
They reach out to companies, not all cooperate. So, and their participation rates have gone down dramatically. Again, we talked about this last week.
Right. Yeah, you did.
They make a lot of seasonal adjustments. They also make adjustments for companies being created that they may not know about. So, there's a lot of estimating and a lot of,
No, well, we were
economists
talking
speak to
about
this.
if there was a better way or better data someplace else in order
There
to
is,
capture a better
yes.
number.
The problem is you wouldn't get it for 6 months or longer afterwards. Like this is, when we do market reports here, a lot of stuff
Right. So
that's
it's
recorded at the end of the
lagging.
quarter, you close at the end of the quarter, isn't recorded in time for our reports. Because if they're not out the first day after the quarter ends, they're useless, we're told. And this is the thing that people want to know what July employment looked like on August 1st. Like, tell us what happened.
Right, because it's already a lagging number to begin with. If you're waiting even longer, then how do companies make decisions? How does the Fed make a decision if you don't have the data more timely?
Yeah,
Problem is that if it's not good data, then how do you make good decisions?
And
Because you guys touched on that
if it's
last
not
week about the
reliable
Fed.
data, like what's this going to look like next month or the
Right.
month after? Our buddy Scott Nadler is always, poking us about the revisions. Not like there are revisions. I don't know why he seems to blame us. Remind me to yell at him about that, Ray. Make a show note for next week. But the bottom line, anyway, you slice it, the labor market, this is as big a weakness as we've seen since the days of the pandemic. And it's concerning because it seemed to come a little bit out of nowhere. And it's weird if you say, okay, the BLS doesn't know what they're doing. When June came out, ADP number was very pessimistic and the BLS number was a blowaway number. Now we know that that's not really true.
Right.
But ADP was strong in July and the BLS number was weak. So these surveys don't always go in. Maybe ADP has it right. They're the ones paying a lot of people. I guess it's why we have to look at all of this. And remember, BLS has two different measures of employment in their reports, the payroll survey and the household survey. So it's enough to make you want to hate economists, but don't hate us. These numbers were around before we were born.
Yes.
You had to think about that for a minute?
I did have to think about that for a second, yes.
Okay. I don't know how old you are. We should probably check on that.
Excuse me.
So in other labor market news, we talk about how initial claims for unemployment are still incredibly low, much lower, about 100,000 lower than we saw historically. But continuing claims are going up. It's taking longer for people to find jobs once they're unemployed.
Yeah, why? Why do we think that is?
Well, I think for a lot of
Or what's
people,
driving it, I guess.
a lot of people say, so let's look at the numbers. So the continuing claims hit their highest level since November of 21.
Right.
But we still have 7.44 million jobs available. At least we did at the end of June. That data really lags.
The JOLTS numbers, yes.
But the question is, companies need these workers, but are they holding back hiring because of the tariff situation and the uncertainty that brings? Clearly, yes, to a degree. That would make the most sense. I mean, we whether you're for the tariffs or against it, or you think it's going to do this or that, we don't know. When we don't know something, people don't want to make plans. CFOs are like, hold on, wait, we got to think about this. So, you look at the unemployment rate's only 4.2%.
Right, which is still historically low.
But then you look at the data, and remember, you're not unemployed if you're not looking for a job. And what's happened the last 3 months is the labor force participation rate has fallen each of the last 3 months. So if that's not enough to give you a headache, we'll come up with more facts and figures to throw at you.
Yeah, let's not.
But you know what? We're going to take a break now because now we have some reasons to be optimistic.
Oh, goody.
I don't know what they are, but we have some. We're going to make them up
Yay.
during the commercial.
Oh, okay.
Or, Alfred E. Newman's going to tell us. But either way, stay tuned. We'll be right back with some good news.
Hi, I'm Evan Greenberg with Langdon Title. I specialize in title insurance across New York, helping real estate attorneys, agents, and brokers close with confidence. I solve problems fast and keep your deals moving. Contact me anytime.
Ultimate Diamond is New York City's most established family-owned jeweler. With over 65 years of experience, Ultimate is renowned for its exceptional, custom-crafted diamond jewelry, its bespoke engagement ring designs, and its ability to source rare, distinguished timepieces. Ultimate has built a legacy of timeless craftsmanship and discretion, making it a trusted name among those who value refined luxury. Learn more at ultimatediamond.com.
This beautiful set here at Studio 1873 is brought to you by the Everset. The Everset provides full-service staging and furniture rental solutions in the New York area. For more information, please visit us at staging.theeverset.com or email us at staging@theeverset.com to request a free proposal.
Oh, and we're back. I thought you were going to do the "and we're back." That's your line. I'm waiting for you because I'm sitting here waiting for you to tell me what to be optimistic about, but you were supposed to do
your mom
the
said
lead-in.
I have to let you speak a certain percentage of the time, or she was going to come looking for me. So.
Yes, Lenny will come after you, so we don't
No,
want that.
Lenny likes me. Lucy loves me, but she loves you a little more. I don't know why, but she does.
Well, a little bit.
You better still be watching, Lucy, because we're going to quiz you on this part.
So you were saying that there were reasons to be optimistic. So what can we look forward to?
Wait, I said that?
Yeah. I know
I just wanted people to come back.
You're like the least optimistic person, right? I mean, if I've known him for years. This is like Mr. Pessimistic over here. So when he talks about optimism, I get a little excited because now I'm waiting. Something really great's
that's
going to
Jeff
come.
Lynne. Yeah, no, we try to be fair and balanced in that way. Where, all right, so stocks.
Yes.
NASDAQ ended. All three averages were up last week. NASDAQ ended at a record high. That's good news. That shows optimism.
Well, they bounced
stock
back 'cause
markets.
didn't they tank a little bit when they got the jobs report?
Yeah, but that was that day.
So that day.
They move on. The S&P 500 is up 9% year to date. Remember, the whole idea of Liberation Day and how badly the stocks tanked then, lost all the gains for the year, and now we're touching new records all the time, and we're up 9%.
So definitely reason to be optimistic.
I always say it's the ultimate mood indicator. People are feeling a little positive despite all the chatter out there, and it's becoming more clear that and we'll get into this in a minute, some of the things people have been worried about have turned out to be nothing.
Oh, yeah.
And if they'd have watched the podcast, they would have known that already. And, if you say, well, how does, Wall Street, help the economy? Those rich people have their stocks. But for us here, specifically in New York City, and any place with luxury, anything to sell, Wall Street bonuses, it's a little early, but they're expected to be up as much as 30% in some sectors of the finance industry.
And last year was a record.
Remember, prior 2 years, S&P 500 has been up over 20%. Yeah. And we're almost on pace to do that this year. So
that's good.
That's one of the things that, the ultimate mood indicator is positive. So you don't have to worry about my gloominess, which doesn't really exist. Don't listen, Lisa.
Sure. Sure.
So we have that. We have the spending bill that was agreed to. I don't know if I'm allowed to say the name of it, so I'm not going to say the name of it, but you all know about the 3 Bs. That hasn't really kicked in yet. That certainty is there now, and businesses can make decisions and people based on what their tax situation is.
Right, because now we know that it's been signed into law.
Right. Hopefully that'll have some positive effect going forward. You never know, but just the time the happiness goes, you think the federal fiscal year ends at the end of next month, and then they gotta come up with the spending bill. It's crazy. So hopefully that'll be good. The other thing we teased was a lot of people, not us, because we know better, talked about how tariffs are going to raise inflation. Even the chairman of the Federal Reserve has said about 35 times each one of his press conferences, we got to see how this inflation, we can't touch rates until the inflation, then the tariffs, we got to see what that does to inflation. Like they're experts on inflation. I know, they're supposed to be the people that control inflation. How good a job did they do 3 years ago on that? Not very good. Thank good ending at some point. So
yes.
that is good to know. And there are apparently 4 nominees.
Oh, are there?
The Treasury Secretary is not one of them. I'm not one of them.
Oh, well.
So I don't.
Then who wants to pay attention if you're not one of the candidates?
Look, the post-meeting press conferences would be phenomenal. People would actually watch them.
But would you be allowed to bring Mr. Guidry, Mr. Newman?
You're the chairman of the Fed. You could pretty much do.
Now I can't think of,
Mr. Patino?
Patino, thank you. Like drawing a blank over there.
St. John's. Sorry, Rick.
I'm not picking on
This year, national championship.
I'm not picking on. I just couldn't remember. Drew a blank.
All right, so we haven't seen any sharp rise in inflation. A little tick up. A lot of that is about weak numbers a year ago, making the year-over-year numbers go a little bit higher. But nowhere near the hysteria that people had said.
Yeah. Well, they were expecting the sky to fall.
Because
or
they've
us.
never heard the name Milton Friedman. They don't know what inflation is. So they just say, oh, no, tariffs, more inflation, blah. More money chasing not enough goods. Now, we saw that during COVID. We had both. We just said, here, let's increase the money supply by 40%. Go out and spend it. And then there weren't the goods to spend it. So things became more expensive. And then when we had enough goods, the money kind of dissipated. In this case, we're not raising the money supply. No one's giving Greg any more money. I mean,
well, they were floating. I forget who was it one of the senators was floating the idea with the tariff.
No, it
money.
didn't float it. It was introduced. A tariff rebate is a terrible idea.
I agree.
And I will tell you why in
that I agree
in a little bit.
As much as, I would love a check.
Yeah. I mean, you're just getting me my money back. It's like,
Okay.
It's like when my son's upset he spent money on something and didn't like it. I go, that was my money you spent. Last time I checked, you don't have a job. So, again, if I have the same amount of money, I may spend more for one thing, but that means less on another thing. And those are the decisions consumers have to make. So, stop scaring people by saying inflation is going to run rampant. And you people know who you are, Chair Powell. Stop doing it. So that is good. Also, a lot of deals have been made.
Yes.
And the reciprocal tariffs officially took effect last Thursday.
Right.
But people can make decisions now, like it or not.
And it's a long list, I think, of countries that have signed up for
we've got most of the
deals.
major ones down, or at least we've had like pauses with China, to try to work a deal there.
We'll see.
Euro, that thing seems to be worked out. With every deal that's signed, you expect more to come, get some momentum. Then companies have a little more, certainty and at least know what the outlook looks like and what that means for their business with these tariffs in place. Again, whether you like them or not, even the World Bank acknowledges that countries have been taking advantage of the United States
for years.
via trade, manipulating
years.
their currency. And you look at the labor conditions in some of these places, it's something that needed to be addressed. Are we going about it the right way? Well, we'll see.
And it also takes time for all of this stuff to work its way completely through.
It does.
So you can't put a tariff on a Monday and think that you're going to have a change on a Tuesday. It's just not going to work that way.
And, it's maybe this is going to sound weird, but here in New York City, we have congestion pricing, which charges a toll to drive into certain parts of Manhattan.
Yes.
Everybody said this is going to ruin everything. It's going to destroy real estate values and nobody's going to come here. Nobody's going to work here. But it's doing exactly what the MTA promised. It's cut down traffic in the congestion zone and it's raising money, about $50 million.
And like anything else, I think people just finally have accepted that it's a cost of
people
doing
are going to
business,
accept
so to
everything,
speak,
but, again, always going to the worst case scenario is usually, wrong.
But then it begs the question that if they're raising all this money with congestion pricing, why are they raising the subway, the bus, and the railroads?
Well, they may not be raising the bus because if a certain mayoral candidate wins, buses will be free. So
yeah, but won't that wreak havoc on people's schedules? Because if everybody's going to ride a bus for free, you'd be standing there online for an hour just trying to get on one.
Well, they
to
have
ride for free.
They do have this huge capital plan deficit that the state's helping them build. But that's an example of something that's working as planned. I'm not saying the tariffs are exactly like that, but the tariffs are raising revenue. In fact, the first 7 months of this year, over $150 billion.
Which is not chump change.
No, I'd like some of that. I don't like the idea of rebate checks. Take the money, pay down the deficit. So that goes to our next thing. This is the 50-50 optimism thing. Rates and the Fed. Now, if the Fed would have had more accurate employment data on May and June, they probably would have cut in July because that weakness came very quickly. And to have it back-to-back months, I think they would have felt like they had to move. Right. But they didn't. Everything looked rosy. So now it's September. It's over a 90% chance of a rate cut of 25 basis points or 0.25%.
Versus a half. How come? Why you think lower?
They're going to do it incrementally. They can turn around and say, look, we cut rates a full % last year.
Right. But it was still, wasn't it? It was 50 and then a quarter and a quarter, right?
It was 50. quarter, I believe. Yeah.
Right? Was that the order?
I don't know. It's Monday. What are you asking me about? Stuff that happened last year. Come on.
Right. So it begs the question whether or not they'll start slow with the quarter or
Some of
full in on
the
the half.
Fed governors have hinted that they're looking at probably 225 basis point cuts,
okay, which just still gets you that half.
which
and a half
really
point.
don't mean a heck of a lot. I know that everybody's saying we need lower rates.
But
There's-
that still
There's
takes
one
time,
particular
too.
person who is saying it every 5 minutes. But let's separate fact from fiction here. And I'm asking all you wonderful listeners and viewers out there. The Fed cut the federal funds rate, which is a rate that nobody uses anymore. It's for overnight loans to banks, but it really either injects money into the economy or takes it out. You had a 1% rate cut last year. Credit card rates go down. Did you notice that? No,
Or
because they
mortgage
really
rates
didn't.
or anything else.
Well, forget about mortgage rates. We'll talk about why you should never expect this to help mortgage rates. But car loans, any short-term or variable loan rate has not come down and noticeably. Why is that? Well, it doesn't have to. That's the thing. The Fed can't tell everybody, look, we're cutting this rate. It means nothing in the scope of things, but you have to cut by an equal amount, and it doesn't work that way. The rate the Fed cuts has no direct correlation to mortgage rates. Never has. That rate that they're cutting is an overnight rate. 30-year mortgages are based on long-term inflation expectations, which basically track the direction of the 10-year Treasury. There's a 30-year Treasury, but that just came back recently. Everybody looks at the 10-year. So you have to get, one of the ways you can get mortgage rates down is to get inflation under control. And they did a lot to try to do that.
yes.
But we're living in a bizarre world where sometimes bad news, like a jobs report, you'd be like, "Oh, this is great. This is going to, dampen the outlook for the economy and inflation. Let's get ready for those low mortgage rates." And mortgage rates have ticked down a bit, but not as much as you would think. But we've actually seen the reverse happen on bad news. It's been a bizarre world. But the other way we could do it is if the government pays down its debt.
Which
You may not have noticed we have a lot of it.
they've got $150 billion
Right.
now to play with.
Don't send
like
it
a
back to
surplus.
us.
Right.
I know you're going to get hate email. You can send the hate email to ctl@bhsusa.com.
No, but wouldn't it be the
Or send it
smarter-
to Ray and Lena at... No, I'm just kidding.
But the smarter plan would be to pay down some of that debt, especially because with the tax cuts now permanent and all of the potential expectations of what that's going to do down the road, wouldn't it be smart to take this extra money, the surplus, and pretend we don't even have it and pay and service some of the debt?
Yes. But you don't get elected by telling people, we're going to put this towards our debt. You get elected by telling people, hey, we're going to send you checks. Like, yes.
Yeah, but if
I
you
like
pay
checks.
down the debt and tell people why it's good for them.
Look, if we could unleash the housing market, it would be great for everybody and really good for the economy. So, you like that smooth transition?
That was such a good segue.
I try. I am a podcast professional. I went to podcast school.
Oh, you did?
No, that basically takes place just finding where the studio is. That's all the training you get. Then they throw a couple iPhones around you, and Ray and Lena go ahead, start talking.
There you go. And off to the races.
Wasn't it a lot like that in the beginning?
Yeah. And off to the races you go.
And I think this is our 70, I don't know what it's, 73rd or 74th episode.
Who's counting?
Me. Because I got to raise my rates once we make like 100. Or at least we got to have a party.
Ooh.
We got to tell Shar and Scott to start
Party every
saving up.
Monday.
No, when you do your 100th episode, though, now
Balloons.
you got to have everybody on the show.
No.
What?
It's just going to be me because
That's like-
I'm going to
'cause
take credit for everything.
Don't all shows do that when they hit like that
No.
that milestone? They bring all the characters back and they have everybody on, and everybody gets a quick little bit part and
No, we're not doing.
celebrate everybody with the big cake and
We're not
fancy.
doing a second Becky thing. You remember Roseanne? Becky left. They
No,
replaced
I
her, and
never
then they
watched
brought the
that.
original Roseanne, the original Becky back. We're not going to bring people that have been. We appreciate everybody that's worked here. They want to come on. We can have them on again. But it's been fun. But anyway, we'll do the nostalgia when we do that episode. So let's see what's up with housing now. So the data hasn't been great, right? I mean,
No.
we're seeing sluggish sales.
Yeah.
Prices aren't coming down. They're starting to, but they're not coming down enough, I guess is the way to say it. Inventory is up big time, but it's the same old story. Prices too high, rates too high.
Yeah.
Even though rates aren't high historically, I know that.
No, but it feels that way.
Why is it? Because we
because
still have
people
3% in our heads?
Right. Well, that's just it, is that when you get stuck on that number and you know that it's like tantalizing, it's like it's out there and it's like somebody else got that and you want it.
Well, I think the thing too is the problem, one of the things with housing and pricing is each side thinks they set pricing, right? The sellers would be like, well, I'm selling it for this and I'm not budging because this is what I think it's worth. And then buyers are like, well, I'm only going to pay this much for the home, without even seeing what's out there. I'm not going higher than this. So, and that leads to problems. And usually in a good market, there's negotiation and everybody,
Everybody feels like they
compromises a little bit and,
at least most of what they wanted.
But the problem now is, even though it looks like with inventory up, and for new homes, inventory is big time up to over 10 months supply.
Yeah, which is a lot.
Home buyers are still waiting for rates and prices to come down. And we got 2 reports about housing that were not the happiest news. Sorry, but we want to bring it to your attention. One was from Goldman Sachs that said housing is going to remain the weakest part of the economy. And if you look at the consumer price index numbers, a lot of that is driven by how much rents have gone up because people aren't buying as often as we would like them to. So that they expect residential investment to fall 8%. That doesn't mean prices are falling 8%, just from an economic total activity standpoint. But, the 2 reasons of affordability, which is rate and price, you combine the payment.
Right, and that's been an ongoing issue for a while.
And then immigration, which, reduces, again, we can argue about legal versus illegal immigration and what that means. Bottom line is it means a decrease in demand for homes. I don't know how big, and also makes it harder to build homes because a lot of the work is done by immigrants. So we'll see if that happens. It's hard to expect a lot to change in housing unless rates keep dropping. It's been a couple of weeks of declines in a row, but still about where we were last year in rates. So
right, and contracts haven't been flying off the shelves.
No, pending home sales, terrible. Existing home sales, new home sales. None of it very good, which leads us to Bank of America's 2025 Homebuyer Insights report.
Yeah,
so
that was interesting. It was an interesting article.
Well, because it gets into the mindset of the buyer, which shouldn't surprise people. 75% of prospective homebuyers say they expect prices and rates to fall and are waiting until then to buy. That sounds like a great idea. I'm going to wait till the cost goes down to buy it.
Well, we've talked about
Is it still going to be there? How do you know the cost? I mean, it's human nature. Just like we talked months ago about people saying, well, I'll buy a home when the rate goes down to 5.5. How's that working out?
Right. But then the home that you want could be gone, or the price of it could have gone up.
And that mixes out the rate. Yeah, it's...
Because in how many different episodes we've talked about that, if you can afford it, if you found the home of your dreams and the payments work for you, jump on it. Because by the time you sit and time the market, the house could be sold. The rates could end up going up, now making that house, even at the same price, less affordable for you. And then all the numbers don't work anymore.
Yeah.
So like I say, I've always been, if everything works, I'm not saying I would never encourage anybody to spend what you don't have and just desperately wanting to be into a house and you'll pay anything and not think about, can I make the payment? No, that's not smart. But if you can, then you should.
Well, I think, being informed, knowing what you can afford, meeting with professionals that can advise you,
Well, and again, and not to where we work, but this is where brokers really do make that
and
value.
Mortgage lenders and attorneys, and they're all part of the process. Work with them. Scott Nadler, our good buddy, always points out people focus too much on the rate. Look at the payment.
Right.
Look how
and
much.
And he's even said, they've got plans to work with people.
Yeah.
So.
It's we as buyers, you in an environment like this, even though it's shifting, we are looking at a buyer's market now.
Yes.
Based on inventory levels, and. It takes time, though, for that shift to really force sellers to face reality.
And part of, I think, the problem is that you still have some just extraordinary homes that are just getting above ask for a lot of reasons.
Well,
and then people get aspirational and go, well, my neighbor down the block just got X, Y, and Z. I can sell my house for close to that, and not realizing there could be a lot of reasons why that house did sell and yours may not. At least certainly not for the aspirational price that you would like to get for
And
it.
the peak season is ending, so, we'll see what
Right.
happens. People worried about what's going to come on in the fall. There were some other interesting findings in this report. Gen Z buyers. My son's a Gen Zer, but he's a little young to be buying.
gonna say,
since he doesn't have a job.
Because he's on the
hasn't
back
started
end,
college yet.
right, of that.
Yeah, he's one of the youngins on there. But they're getting more creative, taking a second job for their down payment or purchasing with siblings.
I don't know. Well, I saw also about buying down points has become.
Well, yeah, or asking, relatives to chip in, but people have always done that. It's not new. Buying with siblings is a new thing. That would never cross my mind. You
can't buy with any of
get
your
out
brothers.
of the house and get away from my three brothers. But another thing that buyers worry about now is severe weather. We've talked about this before, how hard it can be and expensive to get homeowners insurance. So they are concerned about that. Although there was an article that came out looking at home prices in LA County, saying they're up slightly this year. So even after the terrible wildfires at the beginning of the year, demand for housing there is still pretty strong. So what does all this mean? What's the takeaway about housing? What is it, Lisa? No, I'm just kidding.
Oh, go buy something. Just buy.
Or sell. Just do
keep
one of the
buying.
two.
Put your apartment on the market, put your house on the market, and somebody will buy
It
it.
reminds me of that Trading Places where they're trying to explain to Eddie Murphy what they do as brokers. And the one brother goes, tell him the good part. And he goes, whether our people make or lose money, we still get our commissions. We're not like that at all. We are about relationships, and we want, as fiduciaries and professionals, real estate agents, lawyers, mortgage lenders, they want to be as honest and as transparent as possible. And, again, you should take advantage of those resources because this is an important decision to make. But for sellers, it sounds like a broken record and we talk about pricing correctly, but the tide is turning. New home sales have been sluggish. The inventory is way high, over a 10-month supply. What does that mean? If we didn't make any more new homes, it would take 10 months to sell the existing supply. It's a way to put inventory into a reference. If I tell you there's 100 homes for sale and in a market, your logical question is that a lot or not enough? You look at the pace of sales, how many sell in a given month, and so if you have 100 and 10 are selling each month, you have a 10-month supply. That's not good because numbers above 5, it favors the buyers. If you were selling one a month, then it would be a seller's market. And that's kind of what we've experienced for the last several years since the COVID rush, after the COVID rush. So, the market's brutal. It will tell you you're overpriced when no one shows up to your open house. So, work with your professionals to really come out of the box accurate, because with all the websites out there that have all this information, you can't hide.
Right. You got to lean into their knowledge.
Yes.
They do know what they're talking about and they do know what they're doing. And listen, it might not be the news you want to hear. I mean, again, it's the reality in our aspirational dreams. You and I, we both own homes. I may have a price in mind that I really want to get for my house, but then the reality could be very different. And I've got to trust that the agent knows
There's
what they're
three
talking
things that
about.
buyers don't care about.
Your
What you think
feelings.
it's worth, what you
How you
paid
feel.
for it, and what you put into it. They don't care.
They just want the value. They want
And just like the
seller.
seller doesn't care what the buyer thinks the home is worth.
Right.
But ultimately, you have these standoffs. It lasts a while, and then things open up again. Hopefully, we will hit that stride, towards the end of this year and then into next year. Lower rates will help for sure, make everybody else happy.
And more choices when the inventory starts
The inventory is
to
already there.
increase.
It's there. Now, some people say, yeah, I'm trying to buy in Palm Beach. We understand there are areas like that, markets here in Connecticut where there's nothing.
Right. Very
Long
low.
Island,
Yeah, I was going to say,
Westchester,
Long Island is still
it's
very light. I get stuff all the time at my house. Hi, we want to buy it. Yeah, I think was it yesterday, the other day in the mail. We'll buy cash. I was so tempted to call and be like, okay, so you tell me what you think the house is worth and what's your cash number? And then we'll see, because it's like, as is, don't worry about cleaning.
See, I
or
would want the
fixing
stereotypical thing you see in cartoons, the sack with the
with
dollar sign, and the
right
money's
on.
hanging out at the top of it. Like that's the kind of cash I want to see.
Well, if you drive up to my house,
Handing me a
it'd be
check
better.
is not cash. I want old school under the mattress, although that'd be a lot for most people because homes aren't cheap.
Aren't cheap, no. And thank goodness for us on Long Island, they're still doing really well. So
Well, a lot of places,
grateful for that.
nobody's talking about crashing markets that much, but when you feel the change, you want to get ahead of it. We always say here on Crossing the Line with Greg Heym, you want to be the first person to cut his or her price, not the last person, because that's the one that really gives the biggest discount. Get ahead of the market, see which direction it's heading. And again, that's where the professionals come in. You can get your reports. You can see where things are selling for. You can also walk around your neighborhood. How many for sale signs do you see? That's always...
Or the open houses really on the weekends
Yeah.
that you see this, when you're driving around. I don't always see a lot.
Well, it's been a rush of buying over the last 4 years that we have never experienced, when you think about it, in many parts of the country. And if we had more to sell, we would have sold a lot more stuff. But now, here in New York City, things have been more balanced over the last couple of years. So prices haven't moved much. And we have a decent amount of all cash buyers, 60%, according to Property Shark, of Manhattan buyers so far this year were all cash. Or as we're supposed to say, so key-ish.
Yeah. Well, this way they avoid the rates. If you've got the cash to spend, and then the rates don't matter to you.
Cash is a good thing to have. It puts you at the front of the line, let's be honest. All right, on that happy note, Lucy, I hope I let Lisa Rae speak enough.
Yeah.
She seems very happy with that. Well, thanks for being on the show.
Oh, my pleasure.
And thanks to Ray and our bride-to-be for just being themselves.
Yay.
We love you just the way you are. And to the viewers, listeners out there, again, we love feedback. CTL@bhsusa.com. Have a great week. And next week, it'll be the Three Stooges again. Me, Scott, and Shar talking about who knows what. We'll see. But hopefully we'll see you then. Have a great week.